Thanks so much, Tony. So, our corporate treasury clients and honestly our bank clients for the last, I don't know how many years, have been asking a lot of questions on China specifically, the potential impacts, the decisions that are made in China and how that affects the global economy, how that impacts financial measures in Europe, the U.S., and on the impacts of global treasury functions. The topic of China and issues related to China have come up so frequently that going into 2018, we as a firm felt it was important to have an actual expert join the discussion. So today we're joined by Dinny McMahon. He's a fellow at Macro Polo, a China-focused think tank here in Chicago. And he's the author of a book that's coming out called China's Great Wall of Debt, Shadow Banks, Ghost Cities, Massive Loans, and the End of the Chinese Miracle. I know, right? It's a bomb-throwing title for sure. The book will be published by Houghton Mifflin Harcourt in March. Now, Dinny spent 10 years working as a financial journalist in China. Between 2009 and 2015, he was with the Wall Street Journal in Beijing, where he wrote about China's banking and financial sector, focusing on rising debt levels, urbanization, and the role of the state sector in the economy. Previous to that, Dinny wrote for Dow Jones Newswires in Shanghai, where he focused his reporting on the yuan, I'm never going to get the pronunciation right, and also on China's foreign exchange market. Dinny also contributed to the Far Eastern Economic Review. Prior to joining Macro Polo, Dinny spent 2 years as a fellow at the Woodrow Wilson International Center for Scholars in Washington, D.C. Dinny, thanks for joining us.
Thanks for having me, Kevin.
So let's start by discussing this new book. Maybe start by talking about the main themes of the book and how those themes impact our corporate treasury audience.
Okay, thanks, Kevin. Well, what I write about in the book is how the debt and dysfunction levels in China's economy has now kind of got to an extent where at this point some sort of economic reckoning is all but inevitable. But rather than wade in at 30,000 feet where most of the debate about China's economy takes place, I write about it from the ground up, looking at the mechanics of how China's economy actually works and focusing specifically on how and why so much waste and debt has accumulated and why it's proving so difficult to fix.
Okay, so in that battle against, waste and debt, I guess it seems that China is, my impression is starting to make some headway. Is that a fair assessment?
Yes, it seemingly is, although that comes with some significant caveats, which I'll get into in a little bit. One of Beijing's big-ticket reform items for 2017 was deleveraging, and on that front, it's made some headway. But not necessarily outright success. Now, what I mean by that is that the extent to which the economy is in fact deleveraging, it's not happening in absolute terms, right? So the total stock of debt is still rising. Now, however, when we talk about the debt to GDP ratio, so the actual stock of outstanding debt relative to the size of the economy, well, on that front, we're making headway. So in the middle of last year, the growth of that ratio effectively stalled. And although we don't have debt for the entire we don't have data, for all of 2017 yet, it looks as though that ratio sort of increased marginally. Now this is all very significant because if we look at the IMF's data for debt to GDP since, for the last 8 years, they reckon that in 2008, China's debt to GDP ratio was about 140%, and that by the end of 2016, it was up to 242%. So that's an increase of 100 percentage points over the course of 8 years. And so the idea that the government has been able to stall that accumulation, and not only stall it, but effectively achieve its holy grail, which is to stall the accumulation at the same time as allowing economic growth to continue at its same robust pace, that has been a very major achievement.
Okay, so you were talking a minute ago about caveats. What are some of those caveats that you were mentioning?
Well, there are reasons to think that this turn of events isn't sustainable. So firstly, it's been made possible because of higher producer price inflation and a rebound in exports, both of which boosted profits at China's big industrial firms and so reduced the need for them to borrow. However, the government doesn't have much control over either. So exports will depend to a certain extent on what the dollar does and whether the Trump administration decides to go after China on trade. And as for inflation, well, at the end of last year, there were already signs that producer price inflation was moderating. Moreover, the other factor that made this sort of moderation of debt accumulation happen last year is that the government stimulated the economy, but it stimulated it to a degree that is far in excess of what's generally appreciated, because it did so by spending down savings that had accumulated over the past couple of years. Now, those savings are now gone, meaning that Beijing will have to borrow more if it wants to stimulate to the same degree as it did last year, and that's something the central government has always been very reticent to do.
Yeah. So, if I understand you correctly, I guess what you're saying is for China to deleverage, Beijing needs to, I guess, hope and pray that the macroeconomic stars align.
Well, not entirely, because deleveraging is also happening on another front, albeit one that gets less headlines. So the financial regulators are very actively and aggressively winding back credit in the financial system, but their actions are perhaps best thought of as, I guess, de-risking rather than deleveraging. So, for example, one of the concerns that has sprung up around China's financial system in recent years is that it's increasingly taken on some of the characteristics that allowed contagion to spread through the US financial system when Lehman Brothers collapsed. So whereas traditionally Chinese banks have funded their loans almost entirely from their ample deposit bases, in recent years both banks and shadow banking institutions have increasingly borrowed from each other. Now, that's partly because some banks, the smaller banks in particular, have come up against the limits of their deposits, but it's also because interbank lending helps them structure loans in ways that allows them to get around regulations, and in particular to fund more speculative ventures that Beijing says they're not supposed to be doing. But over the last year, China's central bank, armed with new tools for liquidity management, has slowly tightened monetary conditions and has thrown that growth of interbank lending into reverse. And meanwhile, there are other sort of promising signs as well. So over the last couple of years, and certainly in 2007 in particular, the banks have very aggressively started writing off loans, and the banking regulator has started handing out fines fairly freely to any sort of violations of the regulations. And so whether you call all of this deleveraging or not, it's a real cleanup of the financial system. The question is, however, whether it will stick.
Why wouldn't it stick? I mean, the government recognizes there's a problem, obviously, right? So why would there be, like, backsliding?
Okay, so this is where politics gets involved. One of the theories that has had a lot of currency among sort of China circles over the last few years is that Xi Jinping, the president, spent the first 5 years of his tenure as president consolidating power so that he could make the tough decisions necessary to reform the economy in his second 5-year term. Now, certainly his reform agenda hits all the right notes. So he wants to deleverage, he wants to pare back all the industrial overcapacity which plagues the economy, he wants to deal with the excess of housing that has sort of sprung up in many of the cities around the country. He wants to cut the cost of doing business, he wants to alleviate poverty, he wants to, deal with the pollution problem that sort of deals with, that's a problem across the entire breadth of China. However, all of these things all of these agenda items essentially will, well, not all of them, but most of them at least, will take a bite out of growth. And so the question is, what happens to reform if growth starts slowing meaningfully? And so Xi Jinping may have consolidated power, but it's still unclear just how far that power extends. There is a tendency for us outside of China to think that the central government in Beijing as being all-powerful. That its writ gets obeyed throughout the far reaches of the country. But that has never been the case. In fact, there's been a long basic tension between the centre and the provinces. And so the technocrats in Beijing typically try to rein in waste and excessive debt creation. And meanwhile, the governors and the mayors out in the provinces, they constantly lobby for looser monetary policy. And when they don't get it, they find ways to get around the rules. And so the basic bias, there's this, this basic bias of, the need to deliver fast growth at all costs. That's hard-baked into China's political system for a host of reasons. And whereas the senior leaders have been trying to break that down for years, they've always struggled to. And so if you listen to Xi Jinping at the moment, he talks of the need for the Chinese economy to refocus on the quality of growth rather than the outright pace of growth. But there are plenty of barriers at the lower levels of government that could easily prevent him from achieving that sort of transition.
So what does that mean for deleveraging? If things look, I guess, fairly rosy now, what should our audience today be looking for in the future, in 2018?
Well, I feel that when it comes to deleveraging in China, we've been in a similar position before. In fact, we've been in this position repeatedly. And that is that the government declares that it's making headway on reining in credit. Certainly some of the data shows that things are moving in that direction. Perhaps it's, success in curtailing local government borrowing or some aspect of shadow banking. But what's really happening is that the money has just moved elsewhere. Right. It's effectively Goodhart's law in effect. That's, when a measure becomes a target, it ceases to be a good measure. And that's what happens time and time again in China. The regulators bring some aspect of the financial system under control, and the money invariably moves to a part of the system that no one is watching. Now, I can't say for sure that the recent wave of deleveraging is obscuring some shift in the way debt is created, but that has been the basic trend of the last decade. Effectively, the financial system has sort of geared itself up to be able to respond to regulations in such a way. And so it's probably a little bit too early to declare victory or even progress until we kind of see where things stand in over the next 12 months. Now, certainly, in some ways, taking a more macro perspective on this, I mean, in some ways it is difficult to talk about the risks to China's economy. Because, I mean, Xi Jinping, he can make all the moves necessary to bring the risks under control. There is nothing to say, that Xi Jinping is incapable of bringing these things under control. I mean, he definitely seems to be the strongest leader in China since perhaps Deng Xiaoping. But even if he does, it remains an open question as to whether the authority we assume he has today will last in the face of slower growth. So officials might acquiesce to reforms today, but support might be short-lived if growth falls too far. Now, of course, when it comes to sort of talking about risks in the Chinese economy, people have been sounding the alarm for years. Now, that doesn't mean that China doesn't have problems, nor does it mean that the government has managed to fix its problems. As far as I'm concerned, all that really means is that the authorities have been extremely good at keeping the machine moving without fixing the underlying problems. Now, at the moment, there seems to be an unprecedented appetite for growth in Beijing. Now, what is less clear is whether Beijing is genuinely in a position to carry them out.
So what does that mean for the global economy? If China doesn't manage to handle its what sounds like debt problems, essentially, and eventually confront some sort of economic reckoning, what does that mean for the rest of us?
Well, that's an incredibly difficult question to answer. Maybe as a starting point, at Davos last year, Xi Jinping noted in a speech that since the global financial crisis, China has been responsible for generating something like 30% of global economic growth. That sounds like a big deal. But that growth hasn't benefited the globe like growth in the United States does. So whereas in the United States imports a lot, effectively supporting growth in other countries around the world, in China, its trade model has been far more lopsided. And so it imports a lot of commodities, a lot of minerals and metals, and it exports a lot of manufactured goods. In fact, it exports, I think it's about 3 times as much as it imports. And so many of those imports are things that can then be processed for re-export. So China's growth has been good for China and a handful of commodity exporters like Australia and Brazil, but it hasn't made a sort of a broad-based contribution to global well-being. However, that's now rapidly starting to change. China has an increasingly affluent society, which is spending more and more on things that China can't produce domestically. So it's things like, internationally ranked university education. I mean, that's something that is it's a real shortage of supply of that in China. And so you've got tens of thousands, in fact, you've got hundreds of thousands of Chinese students going abroad for a university education. China can't produce agricultural products on a scale or of a quality that satisfies its growing middle class. Yeah. And so they buy billions of dollars worth of soybeans from the United States and increasingly is developing an appetite for things like, American cranberries and Maine lobsters. And then it also can't produce high-quality consumer goods. Things like, the Chinese consumers continue to flock to French luxury brands. And when Chinese go to Tokyo on holiday, they come back with caseloads of Japanese electronic goods. And they also can't produce high-end electronic goods like airplanes, such that Boeing executives believe that Chinese demand for air travel currently supports about 150,000 jobs in the United States. So how this diverse and fast-evolving tapestry is affected by deeper Chinese economic problems, I really don't know. But I thought at this point it might be worth quoting Rashir Sharma, who is the Chief Global Strategist at Morgan Stanley Investment Management. And he wrote in 2016 that if every previous global recession started with a downturn in the United States, the next big one is likely to begin with a shock in China.
Thanks for sharing, everybody, on the call, Danny. Very much appreciated. Honestly, I think we all are anxious to see what 2018 turns out to look like, for the global economy, but especially for China. Danny, thank you so much for your insight and your time today. Everybody here that's listening, let us know what you think about this topic by commenting on the webinar, on LinkedIn, Twitter, ring a cowbell, send me an email, whatever. If we do have a sufficient response, a positive response, I think we might make China a standing topic for 2018 and follow this trend and see where it goes and force Dinny to keep coming over and being a part of this webinar. So thank you, Dinny.